Martin, welcome to the show.
Hi, Catherine. Thanks for having me.
Yeah, of course. So maybe we can just start with you telling us a little bit about yourself, and where do you live, and your
Yes,
background?
my name is Martin, as you already mentioned. I'm living in Zurich and I'm a tax consultant. So I have my own business helping clients, mainly expats, but also Swiss people with their individual taxes.
Okay, amazing. And what got you started in that?
That goes way, way back. I did a apprenticeship once on the communal side.
Okay.
And then I moved to the tax authorities, also local tax authorities here in Zurich. And after that, I stuck with the taxes. And then I was working for a Big Four company in the global mobility field, also helping people with taxes in Switzerland, also social security and a little bit of immigration as well. And since 5 years I have my own business and never get rid of taxes.
Of course, yeah. Everybody needs tax help.
Yeah, exactly.
But
exactly.
as I understand it, you're specialized in dealing with expats and expat taxes mostly. Is that right?
Yes, so I would say that most of my clients are foreigners in Switzerland, and it usually has a connection to their home country or wherever they're coming from. And I think I have a good understanding of what they need and what they're asking for and what their problems are. I myself used to be an expat as well once, so I was living in Singapore and Malaysia. So I understand a little bit also the struggle of moving to a country you don't really know.
Absolutely, it takes a while, doesn't it, to get settled and understand the system and everything. So
exactly, and the rules are different. So I see myself also as a bit of a translator or someone who hand-holding person and guide them through the tax jungle.
Yeah, and that's going to be so helpful, of course. So let's start a little bit with the tax basics. There are different levels of taxation in Switzerland, right? So like federal, cantonal and all that. So can you just explain how that system works? Because I know it's not the same in most other countries.
Yes, correct. So Switzerland has basically 26 or 27 different tax laws, one on a federal level, so that's wherever you're living, that's what you're paying in every canton. But then it has 26 different cantonal tax laws, and the tax rates and some rules might be different from one canton to another. And you also pay communal taxes, so
yes, that's right.
Also on a communal level. So you have these three different taxes you pay, and it always depends where you're living at the end of the calendar year, and that's why you're paying for the full year.
So if you move from one place to another, it will still just be wherever you ended up at the end?
Yes, that's correct.
Oh, interesting. Okay. Yeah. So I guess everybody pays federal taxes like the same?
Yeah.
And then
correct.
Cantonal, I know some people move to a specific canton because some cantons have significantly lower taxes than others, right?
Yeah. So Zug, for example, is very famous as a low tax canton.
That's right.
So let's say if you move today to Zug, then you will pay for the full year in Zug. And then it also depends on a communal level. Every commune has its own multiplier, and that has then also a bit of an impact as well.
Yeah, so even if you're living in the same canton as, say, your neighbor, you might pay different tax rates.
Yes,
slightly, I guess.
That might be possible,
Yeah, which is interesting because it's completely different in other countries, isn't it? Like in the UK, I think you just pay the same pretty much in all of England.
Yeah.
So that's very different. For someone to come and understand that system, it can be a bit
tricky. It comes from the political system as well, where the commune and also the canton has quite a bit of power, and they're also defining how much taxes they want to charge.
Yeah, which is also then interesting because you can then actually have a bigger influence on your taxes if you are then strategic about it. Especially someone coming in who doesn't yet have a tie to Switzerland, who doesn't need to live in a specific area.
Yeah, absolutely. That definitely has an impact as well on where you end up living, I guess, when you're new to Switzerland.
Yeah. And then there's one more thing, there's church tax, right?
Correct. So you have the communal, the cantonal and the federal tax, and you're also paying church tax in case you belong to one of the official churches in Switzerland, is the Christ Catholic Church, the Roman Catholic Church, and as well the Protestant Church. So these three churches, the tax authorities would collect the taxes for them as well. If you belong to another church or to no church at all, then you wouldn't pay any taxes for the church.
And I think you have to declare that when you first move to Switzerland, right?
Correct. When you arrive in Switzerland, you will be asked in what kind of church you belong to, which might be a bit weird question when you
but it has an influence on your taxes.
There is a background of the taxes, exactly.
Okay. Yeah. So that's quite good to know then what you're signing up for.
Yeah, that's important to know when you arrive in Switzerland.
Excellent. So now we know the levels of taxation. We have to talk about the different types of taxes that you might pay. So obviously the most important or the most immediately important one might be income tax. So if you have an income in Switzerland, then you obviously are taxed on that.
Yes, correct. So it's the income tax. Also interesting is there's also a wealth tax. I don't know if we come to that as well. That most countries don't have. So you pay income tax and wealth tax.
Yes.
And on the income tax, what you usually declare is your salary. If you're self-employed, your profit. Then you also pay taxes on dividends and interest, and also on rental income. You will pay taxes as well. So that's basically all go in one basket, and then you end up with a taxable income, and that's the base then on which the taxes are calculated.
Okay, so all of the income that you might have from different sources, mainly I would think for most people employment, but they might have other sources of income, and then that's all put together for your income tax.
Yes.
And tell us how it works if someone owns their own home. So they're not renting, but they own their home. There's still some income tax to pay, isn't there?
Yes, I know you would ask that.
Everybody wants to know about that.
Yeah, deemed rental income, which is a bit of a strange concept, not known in any other country. So if you own your own property and you live there as well, there is this fictitious income which will be added to your salary or to your taxable income.
Based on how much you would get if you rented out your home, or?
Theoretically, it's a formula. The deemed rental income should be between 60 and 70% of a market rent.
Okay.
And that's calculated through a formula. Whether this is correct or not is then the different question.
Yeah.
If you own a property in Switzerland, the tax authorities would tell you what this deemed rental income would be. Right. So in Zurich, for example, there will be a new valuation next year. Oh. So first time applicable for the tax year 2026. So they come and say, this is your deemed rental income.
Okay.
And attached to that is also a taxable value for wealth tax purposes. Yeah, and that's going to be added. If the property is abroad, then you would just use a formula based on the market value of the property.
Okay.
I got a lot of questions about what is the market value of the property. That's you estimate that.
Yeah,
basically.
It can be a bit difficult to estimate, I'm sure.
Yeah, as long as you don't sell the property, you never know what the market value is.
Yeah. Once you have all your income that needs to be taxed, I'm sure there are some ways that you can then reduce the amount of tax you have to pay. So give us a few tips about how to reduce your income taxes.
So if we stay with the properties maybe, so you have this deemed rental income on the income side, but then you also have a deduction for maintenance. For example, maintenance in the sense of the Swiss tax law is all investments you do in order to keep the value of the property. If it increases the value of the property, it would not be deductible from your taxable income. So usually you look for words like replacement or renovation or these kind of things. If there hasn't been a pool before and suddenly there is a new pool, then that would not be deductible.
Yeah, no.
For
that
example. Then also the interest. So if you have a mortgage, the mortgage interest would be deductible from your taxable income.
Okay.
And the mortgage balance as such would be deductible from your taxable wealth.
Oh, I see. Yes, that makes sense. Yeah. So for a lot of people in Switzerland, they imagine that it's not worth paying off the entire mortgage because you can deduct so many things, right?
Yes, so that's interesting. So in Switzerland, usually people don't pay back mortgages. So they keep the mortgage in their head. Say it's tax beneficial, so we don't pay back the mortgage. If you do the calculation, I think it depends a little bit on the interest rate. And so you would have to do the calculation. As long as the interest rates are so low, it might be beneficial. But then if they go up, you always have to do the full calculation. So on one hand, you save taxes by paying the mortgage and the mortgage interest, but then you still pay to the bank, so you still pay something.
It just depends on the individual situation.
Absolutely. Yeah. That for foreigners, it's always interesting that in Switzerland you don't get a mortgage like in other countries like the UK or France.
And then you immediately try to start paying it off as quickly as possible.
Exactly.
Yeah.
That's not a concept very known in Switzerland.
Yeah, it's interesting, isn't it? The difference.
Yeah.
But what about, so let's say someone comes and they start out by renting, they don't own a property yet. How can they reduce their taxable income?
Yeah, so the rent is not affected. Only in the canton of Zug you have a deduction for rental.
Oh, nice.
So here we see the different canton and the cantonal laws.
So maybe the conclusion is here that just to move to Zug.
But the rent is quite high there as well. It always depends a little bit. And then it's not all about taxes.
No,
so,
of course.
As I said, I also live
There's
in
other
Zurich.
parts of life where you might decide to go somewhere for another reason.
Exactly.
Of course.
Yeah, so in general, the rent is not tax deductible, but if you're working, there are some business deductions like commuting costs from home to work, which would be deductible. Then also the costs for having lunch outside, there is a standard deduction. And then there is also a standard deduction of 3% of your salary up to 4,000 Swiss francs for all kind of little expenses you might have in connection with the job. So that's quite good. You don't necessarily need to keep all the receipts. So it's all done through a lump sum.
Okay, nice. Yeah. That's good. And what about things like if you decide to do some further education to increase your skills?
That would also be deductible as long as it's connected to the job and not subsidized by your employer in any way.
Oh, of course, If so, they're already paying for it, you can't then
because
also
these
deduct
are then
it.
Usually benefits which are tax-free and not part of your salary.
Okay,
and therefore
I see.
You cannot deduct
You can't
it
then
again.
deduct them twice, Yeah, and anything else that can be deducted?
There are a few other things. Okay. What we also like to talk about is the Swiss social security system, because these contributions are in general tax-free. There are 3 different pillars. I don't know if you have heard about that.
That's right, yes.
The first pillar is the AHV, so the old age state pension, where you pay a certain amount to the social security system. There you cannot do much, so that's 5.3% what you then deduct or got deducted from your salary. Also the unemployment insurance would be something which got paid through your salary automatically. So that's the first pillar. Yeah. When it comes to taxes, when it gets a bit more interesting, is then the second pillar.
Right.
Because every employer has to provide a pension fund to their employees. Like
the workplace pension.
Yes, correct. Yeah. And there you usually have a gap in that pension. That's nothing dramatic. The gap automatically is created by, for example, if you have a salary increase, there is a gap created because they always calculate the amount you should have in your pension fund based on today's salary and what you should have when you reach retirement age.
Of course. Yeah.
Now, if you are new in Switzerland, obviously you never contributed to the Swiss pension fund.
A very big gap.
Of course.
Yeah.
And you can close that gap by making voluntary contributions to the pension fund. These voluntary contributions would be fully deductible.
Oh, nice.
From your taxable income.
Amazing.
A few caveats there, but before you do that, maybe check also what your future plans are, because there's a blockage of the entire pension fund for 3 years, so you would not be able to touch that money if you made voluntary contributions.
Oh, I see. Okay.
Yeah, and then we have the third pillar, and the third pillar is a complete private savings scheme, where if you're employed, you will be able to contribute 7,253, I think.
Okay.
For this year, 2025.
Okay, yeah. It changes every year,
It changes
doesn't it? Yeah.
every year or every second year,
Yeah.
and that's the maximum contribution you can make, and that would also be fully deductible from
Okay.
your taxable income.
Yeah.
Yeah.
And then again, it depends whether it's worth it, depending on how long you want to stay in Switzerland and what your plans are, what else you need the money for.
Yes, exactly. So again, the third pillar is also blocked, and there are
Okay.
only 4 reasons why you can take it out. One is, you just mentioned it, if you leave Switzerland permanently, again, you will be able to withdraw that money.
Right.
If you want to buy a property, use it as a down payment. If you become self-employed and you no longer belong to a pension scheme, then
right.
that would also be a reason why you can withdraw that money,
Okay.
using as a capital, for example.
Yeah, for your business.
Yes.
Okay.
And the fourth reason is then when you reach retirement age, and that's
Of course, then.
currently
that's
65 in Switzerland.
Okay.
Yeah.
Excellent. And what about, so if someone comes to Switzerland with children and then both parents maybe are working and they need childcare,
Yeah.
can you make any deductions for that kind of thing?
Yes. So childcare would be deductible up to 25,000 per child per year. Childcare is quite expensive in Switzerland.
Yeah.
But the condition is that both spouses would be working,
Yes.
or
that makes sense.
in
yeah.
other way not be able to take care of the children,
Okay.
for example,
Yeah.
because of disability or illness or something like that.
That makes sense. Yeah.
Yeah.
And then maybe a last one to talk about is, I know that at least for me in the UK, I can deduct charitable donations. So that's possible as well in Switzerland, but is it for all charitable donations, or are there some rules?
Of course, there are some rules.
It's Switzerland, there we go.
Everything's only possible with the relevant rule. Yes, so charitable donations can be deducted as well. However, the institution or charity needs to be recognized by the Swiss tax authorities. There's a huge booklet with thousands of organizations.
Okay. Yeah.
Usually they are in Switzerland, and then you need to be able to prove that you obviously donated.
Yes,
if
you,
it's a
you
Swiss
get
charity,
some kind of receipt or something,
yes,
right?
you get a confirmation automatically by the end of the year, and that would then be also deductible from your taxable income.
Okay.
Yeah.
That sounds good. So there are quite a few options there.
There are quite a few options. I'm just thinking if there are some others. There are lots of lump sums in Switzerland as well. So, for example, health insurance premiums, that would also be deductible. However, there is a maximum deduction what you can deduct. Also, health costs in general, if you pay something yourself. For example, dental is usually not covered by the health insurance. Yes. That's theoretically deductible as well. However, there is usually also a threshold.
Oh, okay.
And only the part over that threshold would be
so
deductible.
Like basic dental treatment, not so much, but if it's something that costs quite a lot.
And depends also on your income, obviously.
Oh, yeah.
So the percentage is depending on your income.
Okay.
And then obviously the threshold automatically increases if your salary increases.
Oh, I see. Yeah, and I guess those kinds of things, that's why you need an expert like yourself to help, because it can then get a little bit complicated depending on the situation.
It can be a bit complicated, or you just need to know it. However, I would say that if you look at the options, what the tax authorities give you in terms of preparing the tax return, these kind of tools getting better and better as well, and guide you through it. Yeah. So my tip, if you want to do it yourself, do it in an application where you have a browser, so you can basically translate. Use the browser translation to
translate it to English. Yeah.
Sometimes the translation is a bit weird.
Yes.
And it might more confuse you than help you, but in general, it's quite helpful.
Okay.
Yeah.
Excellent. All right. We'll be back after a really short break.
Hi everyone, Daniel here. I hope you're enjoying the episode. I just wanted to take a moment to say once again, if you are looking for a role here in Switzerland, or if someone you know is, or if you're looking to hire, let us know. We'd be happy to help. The best way to do that is by going to rigby.ch/apply and filling out the form. And then as soon as we have something that might be suitable for you, we'll gladly let you know. Okay, thank you. Bye-bye.
We already spoke a little bit about the wealth tax, but maybe we just come back to it briefly. So it's not a huge percentage of the wealth, isn't it? It's quite small, and it doesn't start right away from zero as well. Is that right?
Yes. So important to say is that wealth tax you only pay on a communal and on a cantonal level. So on a federal level, there's no wealth tax. So it depends really on the canton you're living in. Some cantons have some tax-free amount. Some cantons, they only start on a higher level. So for example, in Zurich, I think if you're single, the wealth tax starts at 80,000.
Okay.
And as a married couple, it starts at 160,000, roughly. However, you need to declare your wealth, no matter whether you have nothing or a lot. What you basically declare is your bank accounts. Wealth tax is always a snapshot per December 31st. So you basically declare the wealth per December 31st. Okay. So for Swiss bank accounts, it's no problem because Swiss banks will provide you with a statement showing the balance per December 31st. Of course. Okay. For foreign banks, it's usually don't get such a statement because most likely in the country that you're coming from, there is no wealth tax. Yeah, so it's always need it, but you don't need it. So you need to collect this information. Usually a snapshot from e-banking would be sufficient. So you don't need an official statement from the bank because they usually like to charge for such extra work.
But you just have to remember or know on December 31st to do it. To log in and
most likely you can also go back to see it. Where it comes for the snapshot, what's helpful is coins, for example, or cryptocurrencies. There you don't necessarily have a balance per December 31st, so that would make sense to log in on that day to get a snapshot on how many bitcoins or
how many you have and what the price is on that day and
exactly.
all that. Okay.
When it comes to cryptocurrency, there's also an official value.
You could check that depending on how many you then have.
Correct. There is also a official exchange rate provided by the tax authorities when it comes to foreign currencies.
Okay, true.
What's not part of the tax is your pension fund. So the pension fund is tax-free, and also the fund you have in the third pillar would also be something which is not a taxable item.
Okay.
Yeah. And also the interest and dividends out of these pensions, they are also tax-free.
They also won't be taxed. Yeah. Okay. And then we have some other types of taxes like capital gains tax.
We actually don't.
Oh, okay.
So that's the good part. We have a wealth tax, but then there is no capital gain tax. So
I see. Okay. So wealth tax is almost like it's a replacement for that.
Yes, correct.
Or instead of,
Okay, so if you buy shares on the market and you sell it to a higher price, that's usually a tax-free amount. The losses, on the other hand, cannot be deducted.
All right.
There's one exemption if you're a professional trader. So if that's your profession, to trade on a daily basis, then that would be seen as a self-employed income, and then it's automatically also taxable income.
Okay.
There is no concrete points or checklist where you go through and check this, here you are a professional trader or not. So it's all given by the tax practice and some court decision who is a professional trader or not.
I suppose for most of the listeners, they might be employed or have some kind of other income, so it wouldn't be their main income.
Depends always a bit on the circumstances. How often you do it, with what money, if you have a loan in order to trade. Of course. So
then that becomes a bit more complicated.
In Swiss tax law, there's no black or white. It always depends on your personal circumstances as well.
But then what about property tax?
So the property, so the value of the property is also taxable, part of your wealth. However, if the property is not located in Switzerland, then it would not be taxed in Switzerland.
Oh, then it's taxed in the country where it's located.
Correct. But you still have to declare it in your Swiss tax return. It will be considered in order to determine the applicable tax rate. What does that mean? It means that the tax rate is calculated on your worldwide wealth and on your worldwide income.
Oh, okay.
But then the part which is related to the property abroad is going to be excluded from taxation.
So you might have a different tax rate, but you won't pay more on that section of the property that's not in Switzerland.
Yes, correct.
Okay.
So let's say the value of the property is 50 and your amount of you have on your bank account is 100. Your tax rate would be calculated on the total, so on 150, but then only applied on the 100.
Yes, that is in Switzerland, located in Switzerland.
Correct.
Okay.
Yeah. And the tax rates are progressive.
Yes, that's why it matters.
That's why you do
yeah,
that.
of course.
Yeah. Yeah.
And then maybe a final thing is inheritance tax or gift tax. What's the situation in Switzerland related to that?
Inheritance tax, the tax law applicable is always where the person who is giving you a gift or giving you an inheritance. So if the person is residing in Zurich, for example, and gives you something, then the Zurich tax law will be applicable.
Oh,
I think
okay.
that's the first important thing you need to know. So if you inherit something, let's say you're living in Switzerland, but your parents living in Sweden, then the Swedish tax law will basically applicable.
So basically it's about the giver, not the receiver.
Yes.
But
correct.
in Switzerland, as I understand it, there's not usually a tax if it's a direct line descendant, like a child or a grandchild.
That's correct. Yes. So
but if it's not, or if it goes the other way, or it's somehow someone who's not related to you, then you'd be taxed?
Yes.
Okay.
Yeah. Two things are considered. One is the amount of the inheritance or the gift, and the other one is the relationship you have to that person. So if it's your parents who give you something, then that's usually tax-free. If you would give me something, then that would not be tax-free.
No, of course not.
Because we're not related.
Yes.
Yeah.
Okay. So let's talk about the tax year, like the time of year. Basically, in Switzerland, it corresponds with the calendar year, doesn't it? As we just discussed, 31st of December, that snapshot, isn't it? So
yes.
The tax year goes from end of year to end of next year.
Yes, that's correct. Starting on 1st of January until December 31st. That usually gives a bit of a problem when it comes to people coming from the UK or from Australia, or I think Hong Kong has a different tax year as well.
Yeah.
Then you need to transform it to the calendar year. Yeah.
Okay, so let's say the tax year ends on December 31st, and then what happens?
What happens is that you usually would receive a tax return in the following year. So now we're in 2025, preparing the tax return for 2024. So basically clear what income you had in the period between January and December, and also the wealth per December 31st.
Yeah, and so do you receive a form at the beginning of the year from the tax authorities?
Yes. There are some exemptions. So for example, in Switzerland, Swiss people or people with a C permit, they don't have a withholding tax.
Okay.
If you're a foreigner with a B permit or a different permit, then there is a withholding tax. So that means your employer is responsible to withhold the taxes directly from your salary.
So they would have already been deducted, and then you can decide if you want to file a return or just leave it, right?
Yes, unless your annual gross salary is more than 120,000 Swiss francs, so basically more than 10,000 per month, then there is an obligation to file a tax return.
Okay, so then you have to file it.
Yes. And if it's below, then it's voluntary, more or less, because it's only voluntary in the first year.
Oh, I see.
In the following years, it becomes mandatory.
So if you opt to file, then you must file every year.
Yes.
You can't say, oh, I want to file this year and then not next year, and etc.
Yeah.
Okay, so you decide either to file or to leave it.
Yeah. And I think what's also important is that if you're married, you always file together.
Yeah.
So if you're not married, you file as a single person. If you're married, you file together.
Okay.
Here again, the status per December 31st is important.
If you marry in July, you'll be filing jointly by December.
Yes. So you're filing for the full year together. And so for people with withholding tax, if you have withholding tax and you get married to a Swiss person, for example, then that means from the following month on, you will no longer have withholding tax.
Oh, I see. Okay. Is it always a good idea to file a return if it's not mandatory for you, or does it also depend on the situation?
Exactly, depends on the situation. And this one is a tricky one because if you file in this year and you have to file also in the following years, sometimes you don't know what you're doing next year, right? Maybe you have suddenly a salary increase and then
you end up paying more than you would have paid if you just left it alone. Yeah?
Exactly. So what I usually do, I prepare the tax return for my clients. Then we see what the benefit would be.
Okay.
If the benefit is very minimal, then we rather not filing a voluntary tax return. It depends also on the situation. If you receive the C permit anyway next year, for example.
Then you might as well do it because next year it won't be applicable. You'll have to do it anyway. Yeah.
But if you just arrived in Switzerland and usually you have a B permit and therefore having withholding tax for the next 5 years.
Yeah, at least.
And I think it's always difficult to... I cannot read the future.
Yeah, you don't know in 5 years whether it's more beneficial one way or another. Yeah. Okay. So once the tax year has ended, how long do you have to file your tax return if you do need to file one or if you want to file one? And what happens if you don't file at the right time?
So the first filing deadline is usually end of March.
Okay, so quite soon.
Quite soon?
Yeah.
However, they can be extended, also depending on the canton.
Okay.
July, August, some cantons have filing. You can extend until November or even December.
Oh, nice. And there's no penalty or issue if you extend?
There is no penalty. One thing, you have to remember to extend before the initial filing deadline.
Oh, yeah. Otherwise, there's a penalty.
No, there's no penalty, but you don't get the extension anymore.
Oh, okay.
So that means if you missed the March deadline to ask for an extension, the tax authorities will not give you any extension anymore.
Okay, so then you have to file as quickly as possible.
Correct.
Oh, okay. And then you've complied, you file, and then ideally that would be good. And then the assessment comes back, right? And then you receive a bill and you have to either pay more or you get money back, or how does it work?
Yes. Every tax returns get reviewed. Not like, I know other countries have just like...
0.5% or less get chosen each year. And everybody else, they just let pass.
Yeah, in Switzerland, every tax return gets reviewed.
Okay.
And then the tax authorities are either asking for additional information in order to do the assessment. If not, then you get an assessment, or if they're happy, once they're happy, they send you an assessment, and based on that assessment, you receive then the final bill.
Okay, I see.
Now, it depends if you're having withholding tax on your side. Withholding tax will be considered as a prepayment towards that final bill.
Yes.
If you don't have a withholding tax, then you already had the chance to pay taxes before that on a provisional bill. So if you don't have withholding tax, you receive a provisional bill during the year, and you're able to make payments towards that future final bill already in the current year, for example.
Yes, which makes sense because otherwise you might be hit with a massive bill that you haven't anticipated, or it's a bit difficult to pay off all at once. So
you definitely have to anticipate some taxes if you don't have a withholding tax. Sometimes for people who are not used to it, it's a bit difficult as well. For example, if you had withholding tax on a B permit and then you receive the C permit, and suddenly you have much more money on your bank account, which is fantastic.
But it's not really all of it your money. So
yes, you always have to account for the taxes as well. And to get into that, so the responsibility basically shifts from your employer to you as an individual to pay the taxes. And I see it often that some people are struggling in the first year to get used to it. What I would do, there's several ways to do it. Either just put some money away for taxes, maybe open a separate bank account for yourself where you basically put your money on the bank account. You can also pay it directly to the tax authorities. Oh, you can pay it in smaller chunks ahead of time? Yeah, that's what I'm doing. So I have a standard order. I send money to the tax authorities and then at the end, monthly basis. They calculate if you've already sent enough or if you need to send a little bit additional. Yes, correct. So they do then the accounting at the end. So when they send the final bill, they check what you paid on a provisional basis. And then you either have to pay an additional amount or you even get some money back.
Yes, and
Yeah.
we have a very similar system for self-employed people in the UK, and I then do the opposite with the bank account. So
Yeah.
it works as long as you roughly know what percentage of tax you might need to pay.
Yeah.
You can then each month put away the correct amount, and,
Yeah.
and then it's relatively easy, just as long as you don't consider it like your own money.
Yeah, don't spend
Yeah.
it.
Yeah. You might struggle, but even
Yeah.
if you do, an accident can happen. You can then extend the payment deadline or pay it off in chunks, right? Is that right?
Once it's final, it's difficult to pay it in
okay.
chunks. So usually the final bill is due within 30 days. Otherwise, you would have to request it by the
Yes.
tax authorities. However, they don't have to. They don't.
Oh,
have
it's
to agree
up to them then whether
Yeah.
they want to allow that or not.
Yeah, you need to have good reasons for
see.
doing that. You
Yes.
might even have to provide a budget to show what you pay in terms of rent, in terms
Oh,
of
I see. To prove that you
phone
can't actually
bills.
pay it right now.
Yeah, yeah.
Okay, that's interesting. So that's one thing to be aware of if you're new to Switzerland or new to this system. And then also something I know people are worried about occasionally is international taxation. So if you come from a different country, you might worry if you're registered in both countries, or how's that going to work? Might you be taxed twice?
Ideally not.
Yeah.
Switzerland has, with most countries, a double tax treaty,
Okay.
with some not. However, I think important is if you move to Switzerland, for example, 1st of June, you would only be taxed on your income from the time you become resident in Switzerland.
Okay.
So from 1st of June on. In that year, you would also file a part-year tax return, which only starts on 1st of June until the end of the year. So whatever you had in terms of income before your effective moving date to Switzerland is not going to be declared.
That would
in
then
your
be
tax
taxed in your old country.
Yes, most likely.
Most,
yes.
yeah. But then I suppose you deregister in the other country and then you register in
Yeah.
Switzerland, and then hopefully
Yeah.
there won't be any issues with that.
Yes, correct. And then sometimes you have some trailing income as well. So for example, you still receive a bonus in the next year, which
Oh,
still
yeah.
relates to your work from abroad. That can usually be exempted from taxation.
Oh, I see.
in
Because it then
Switzerland.
will have already potentially been taxed in the other country as
Yes.
well.
Yeah,
Yeah. Okay,
Yeah.
that makes sense.
yeah.
Yeah.
And then
well,
there are some other specialties, but we can look into that on an individual level. Then.
yes, I think so. I think then those very specific things will require a personal meeting with you. Yes, excellent. So let's talk about if people have follow-up questions, or they do have one of those special issues and they want to
Yeah.
reach out to you. How can they get in touch?
Various ways. Either it's martinbeiner.com, that's my homepage. Also, I have a second one, which is called it's taxtime.ch.
Okay, excellent.
Or the easiest way, I guess, also via Instagram, taxtime with Martin. That's where you
Nice.
can find me.
Yeah.
And follow me. There are also some tips from time to time when it comes to taxes. However, if you listen to that podcast,
You already know all the tips.
You almost know all of it, yes.
Excellent. And then what services do you offer? Do you complete tax returns for people?
Yes, correct. So complete tax returns. As I said, I see myself rather as someone who guides you through the tax jungle. So I also help you to understand when you receive the assessment, when you receive the final bill, to help you to account for the final bill, for example, what we discussed before.
Yes, exactly.
So that's how I see my role
Okay.
as your tax advisor, and obviously also prepare the tax return. If you're keen to do it yourself, I often do also just reviews of tax returns.
Oh, I see. So you do it yourself and then you just have a look to make sure everything's in order.
Yes, and then we can
that's
go
helpful.
through it and discuss it again before you send it off so that you can sleep well at night.
Excellent. And one thing also that you offer, I think, if someone would prefer to do it themselves, is a course, isn't it?
I have a course on my homepage that's giving you a bit more of insights. So what we talked today is quite high level. If you want to go deeper into the tax system of Switzerland, then you can also book my course on the homepage.
Amazing, yeah. So then that might help people with maybe not super complicated returns to do it themselves.
Yeah.
Excellent.
Correct.
Thank you so much for joining me.
Thank you for having me. It was fantastic.
Yeah.
Yeah. And call me if you have more questions.
Yes, call Martin if you have any tax questions. All right, that's it for today. So thanks once again for listening. We'll include links in the show notes to our guest and to further materials about some of the topics that we've spoken about today. If you enjoyed the episodes, please leave a review on your favorite podcast platform. Once again, this podcast was brought to you by Rigby. We are a staffing and project services company here in Zurich. If you would like our help, either to hire or to be hired, let us know. Best way to do that is by going to rigby.ch/apply and filling out the form. You can also sign up for our newsletter at rigby.ch/newsletter to receive our Living in Switzerland guide. We'll send you 1 email per month about expat-focused news and jobs in Switzerland. So thanks, and until the next time.